Hey, you wonderful people out there, Chris here from the Business Report Show. Hope you had a wonderful weekend and a good start to the investing week. Now, before I begin, make sure you hit that subscribe button, and if you do enjoy the video, make sure you hit that like button. Every little bit helps. As a disclaimer, I'm not a financial planner or investment advisor, and everything I say in this video is just my opinion and for educational purposes only. Make sure to seek a professional before investing. Now, for this video, I wanted to provide a bit of an update on the Wealthsimple Small Cap Stock Challenge and some small cap stocks that I've added on my radar that I may add to the portfolio soon. If you haven't watched the previous videos, make sure you go back and check them out as it goes through our thesis and our goals of building up this portfolio. Remember, we're only looking to hold 10 to 12 stocks at any one time so that we get a nice diversification of holdings, and we're only using spare change here. So if the small caps do bottom out, we're not out our grocery or rent money. After a round of negative trading days last week, it looks like the market has spent Monday fairly steady as investors were looking to buy in on the growth stocks that dipped last week. I saw my large cap blue chips make a bit of a recovery over the last week and a half as investors reposition from high growth stocks back to the stable value stocks. So my holdings such as Loblaws, the large Canadian grocer, bounced back from the months of lows back to where I entered the stock. Although I've been earning consistent dividends on the stock, I'm actually glad to see the equity position bounce back. I bring this up because I want to reiterate the importance of having a diversified portfolio to weather the ebbs and flows of the market in various sectors. So while I'm a bit down on my small caps right now, my large caps have more than made up for that deficit. I also started looking at oil and gas stocks again as oil futures continued their upward trend over the last week. Although today there was a little bit of a pullback on oil contracts, I do feel that the overall trend over the next few quarters is this upward movement, testing that $70 resistance point. I bought Crescent Point Energy a few months ago around $1.60, and I bought more when it hit about $2.90, and I've enjoyed a continued healthy return as the stock currently sits at $5.41. I do think it's a little bit high right now, especially with oil testing that $70 ceiling, so I'm not going to add CPG to our Wealthsimple Trade Challenge portfolio at this moment. However, two energy stocks that I do like and will be looking to enter for our Wealthsimple portfolio are NuVista Energy and Baytex Energy Corp. I actually can't believe Baytex was trading at one point over $50 a share and NuVista was $18, but you know, as with most Canadian energy companies, they've either been acquired by Suncor or CNRL, they've either shut down, or they've just become penny stocks. I won't dive deep into Baytex today, but I will go over NuVista Energy as Baytex has a similar situation as NuVista. So last week, NuVista announced their year-end 2020 results, and it was no surprise that the numbers were very positive. They pre-released some great Q4 numbers, so expectations were in line when the year-end results were released. Like most O&G companies, they reduced capital spending significantly throughout 2020 in response to the global pandemic, which really helped their overall balance sheet. Not only did they maintain their $440 million credit facility, they also renegotiated various contracts for their oil deliveries, they've reduced staff and executive compensation, and they focused on diverting free cash flow to reduce their overall debt. For Q4, they averaged 49,300 barrels per day production, which was above the initial 2020 guidance, which is why there's been an uptick in the stock. They've also achieved a net debt reduction of $58 million. Operating expenses stayed flat at $9.83 per barrel, giving them a healthy margin throughout the year. Especially with the rising commodity prices in the past few months, you can expect NuVista to generate greater free cash flow to continue that debt repayment strategy. They also sold some non-core asset recently for $94 million and will be using that amount of money on closing to further decrease their borrowings. Another thing that I like about NuVista's management is their re-engagement of their hedging program to minimize the volatility in energy spot prices for their bottom line. Utilizing option collars and swap, they are essentially protecting a certain percentage of the production from the collapse in oil prices. So for this strategy, by selling a call option and buying put options, they establish a range in which their product is either hedged or not hedged. With put options, they can protect themselves in case oil prices drop below a certain spot price. Although there are some risks with prices exceeding the call option strike price, in most scenarios, the risk of oil spiking so quickly to the upper band is less than the risk of them dropping below the put price. NuVista had a bit of a pullback today and is currently trading at $2.22 per share. If oil prices continue their downward trend over the next couple days, look for NuVista to trade closer to $2. I'm not looking to chase the stock, so if we miss this one at this point, we can always look elsewhere. As I mentioned, I won't go too much into the details for Baytex. However, they are a much larger producer at approximately 79,781 barrels per day. Like NuVista, however, their free cash flow has been strong with the rise in commodity prices, and they are definitely on track to deliver $250 million in free cash flow for 2021. Now, however, they have $500 million in long-term debt notes, but they were able to refinance this through to 2027, and they've also have an undrawn credit facility of $360 million should they need to use it. Baytex had a bit of pullback today as well and is currently at around $1.45 per share. I'd be looking around that $1.30, $1.38 as an entry point, depending on how oil trends over the next few days. Now, looking at our portfolio right now for the Wealthsimple Trade Challenge, it looks like the small caps recovered a bit today as some investors are getting in on the dips. Not a lot of new news except for High Tide announcing that it's opened a new Canna Cabana store in Calgary. High Tide was up today around 7%. HPQ, our silicon technology stock, was up slightly, close to 1%. HTL, the recent addition to our portfolio, was down slightly at 2% today. I may look to add some more Hamilton Thorne should it dip around that $1.40 per share mark. One last update to our Wealthsimple Small Cap Trade Challenge is our cryptocurrency. As mentioned in my previous video, in addition to Wealthsimple Trade app, I've started using an app called Ndax, NDAX.io, to trade cryptocurrencies beyond the Bitcoin and Ethereum on the Wealthsimple app. The links are down below for both the Wealthsimple and Ndax platforms. If you sign up, you can get $10 as a bonus to trade. Both Bitcoin and Ethereum are up in my portfolio right now. News on the Ethereum front is that the network is looking to cut the number of Ether tokens in existence with changes known as EIP 1559. Limiting supply is of course going to increase the price of Ethereum as their blockchain platform is quite well utilized. So I'm looking forward to having that positive impact on my portfolio. As mentioned in previous videos, I've also added ADA, Dogecoin, and XRP. I got in on Dogecoin just under 6 cents per coin. It's currently up to 7 cents today, so it's giving a nice bump to the overall portfolio. Well, that's it. Hope you're having fun with the Wealthsimple Small Cap Stock Portfolio Challenge. As mentioned, when I started this, we are looking to build some good savings habits and building this portion of our portfolio as part of the greater diversification strategy. Don't forget to drop your comments below on which stocks you want me to take a look at and ones that you think we should add to this challenge portfolio. Remember, I'm not a financial planner or investment advisor, so make sure you do consult with a professional before investing. Don't forget to hit that subscribe button and also the like button. Every little bit helps. Thank you for watching the Business Report Show. Remember to always be learning, always be investing. I'll catch you in the next video.